Good morning and welcome to the first episode of 7 at 7 from the Economic Times podcasts, a daily financial news capsule to get you clued in for the day. I am Bhaskar Datta. From around the world, US inflation fell to a 3-year low in July, paving the way for a much-awaited rate cut by the US Federal Reserve after 2 years of high interest rates. Data released after Indian market hours showed that US consumer price inflation fell below 3% for the first time in more than 3 years, strengthening the case for a Fed rate cut as early as next month and the start of a new global cycle of lower borrowing costs. The biggest deal in the world food packaging industry just got announced. Mars, the family-owned candy giant whose products include M&Ms and Snickers, said it will buy Pringles maker Kellanova KN for $36 billion. Mars is valuing Kellanova shares at a 33% premium to its closing price on 2nd of August. In 2008, Mars had bought chewing gum maker Wrigley for $23 billion. On to chips and bites of a different kind. Things aren't looking too good for Google. Remember the US Department of Justice's terse verdict on Google last week on its alleged monopolistic practices in the online search market? Well, one of the options the DOJ is looking at is actually dismantling the company. If successful, this would be the biggest court-mandated breakup of a company since AT&T in the 1980s. A similar court initiative to split Microsoft 2 decades ago was unsuccessful. Turning to India, the optimism on inflation isn't just confined to the United States, but growing at home too. India's wholesale inflation cooled to a 3-month low of 2.04% in July. Remember that data released on Monday showed that India's consumer price index, or headline retail inflation, fell to 3.5% in July, its lowest level in nearly 5 years. The declining inflation numbers are supportive of a rate cut by the Reserve Bank of India in coming months, something that markets and borrowers have been keenly awaiting. In market news, if you have been investing in midcap funds, know that you are part of a rapidly growing cohort, because the share of assets under management by midcap funds has passed large caps. Latest data released by an industry body showed that mid-cap funds now constitute 12.9% of the total equity AUM, as against 12.3% for large caps. In fact, mid-caps are now the largest fund category after sectoral and flexi-cap funds. Not everything's looking rosy though, especially as the world economy struggles through protracted political and military crisis. In Eastern Europe and the Middle East, muted global demand and geopolitical tensions slowed India's goods export growth rate to an 8-month low in July. The country's trade deficit widened to $23.5 billion in July from $20 billion the same time a year ago. Merchandise exports fell by 1.5%, while imports rose 7.5%. Turning to the corporate report card, not much reason to cheer here too. India Inc.'s net profits and revenues slowed down in April-June. For a sample of more than 3,000 companies, net profit grew at a 6-quarter low of 9.4%. The reason? A sharp fall in net profit levels of oil and gas companies due to lower gross refining margins. You know who else has been impacted? Mining firms. The Supreme Court on Wednesday allowed state governments to tax mining companies on mineral rights and mineral-bearing lands. The catch is that this would apply with retrospective effect from April 1, 2005. The centre has estimated a 1 trillion rupee loss to mining companies as a result of this. So you might want to watch your mining stocks very carefully. That's all for today. Thank you very much for tuning into 7 at 7 from the Economic Times podcasts. Here's wishing all our listeners a very happy Independence Day.